Hello students, I hope you all are doing good and fine. So in our today's video, we will be discussing your ACCA SBR pre-mock December 2025. The first question, that is consolidation. As you know, sir, in SBR, section A, section B, section A first question is from consolidation, second question is from ethics, third question is from IS and IFRS, and the fourth question is a mix of IS and IFRS as well as sustainability or any hot topic, the current issues, etc. So today in this video, we will be discussing the consolidation first question and understand that for consolidation, we have to allocate 1 hour, not more than that. Out of 30 marks, I say students that 18 to 22 marks will be easy and you can easily score it. Focus on that first. We have to focus on the easy marks. In ethics also, I say students out of 20 aim for 14 to 15 marks, 12 to 14 or 15, keep a range. Then when coming to your section B, out of 25 marks, aim 50% accuracy, it's enough, 15 15, or 12 to 13 marks, 12 to 13 marks, it's enough. So aim for 60. Your score should be more than 60 in your marks also. Chalo then, let us start with the discussion of your ACCA SBR pre-mock. The first question, that is regarding consolidation. Okay, sir. So first we will discuss each and every case. Then we will do the adjustment, your draft version of P&L. We will do the adjustment also. Then what we will do on the Excel sheet also. Okay, sir. Chalo then. Let us start with the question. Consolidation. Section A, very important as you know. Then W is a parent company. Okay, sir. W is what, sir? W is a parent of a W is a parent company of a manufacturing group. Sir, it is into manufacturing business. First point, whose financial year end is 30th September 2006. Year end is what, sir? Sir, year end is 30th September 2006. Year end kya hai? Year end is 30th September 2006. Why? Because we have to keep in mind whether mid-year acquisition is there or not. Remember, on 1st October 2005, W company acquired 80% of Z equity share. Okay. 1st October 2005. So at the start of the year. So it's a 12 months acquisition. Yes, sir. Acquired 80% of Z equity share. Okay, 80% they have acquired in one company. 60% of J equity shares. They have acquired 60% in one more company, that is J. And 90% of H equity share. Okay, so they are acquiring three companies in total. One is Z 80%, one is J, that is 60%, and one is H, that is 90%. So this means what? All these three companies are subsidiary. So parent and subsidiary relationship is there. Then the following exhibits available on the left hand side on your screen provides information relevant to the question. This as per your CB platform. Yes, sir. Fair value adjustment on acquisition of Z. Okay, there is some fair value adjustment on acquisition of Z. We have done this. Sir, whenever there is fair value adjustment, it will increase the net asset on the reporting date as well as date of acquisition. Step number 2, remember. Sir, whenever the net asset of PP is increasing, like asset, like your PP value is increasing, fair value is more. Sir, if the fair value of the PP is more, can I say excess depreciation will come into picture? Sir, that excess depreciation is relating to the fair value of the PP. Can I say in step number 2, we record it. We record it date of acquisition, reporting date. We record 1000, and then we record depreciation. This depreciation is allocated to both parent and NCI. Remember, yes, sir. Then goodwill calculation and the impairment review. Sir, we have to calculate the goodwill and impairment review. We have to see whether it's right or wrong. Yes, sir. Then a very easy part, goodwill calculation, fair value. Then classification required by IFRS 18. Okay. Sir, IFRS 18 came. Yes, IFRS 18. IFRS 18, your P&L format has been changed. It's same like your cash flow now. Operating category, investing activity, financing activity, in which category we have to record. So what could be the issue? The issue could be that they would have recorded in operating, we have to record in financing, this way. Then, sir, gain reported in other comprehensive income on the sale of shares in H company. Now, whenever we sell a subsidiary, do we recognize gain or loss on? Do we recognize gain or loss in OCI? Gain or loss is not recorded in OCI, but they have done a mistake here. They have done a mistake here. Just reading this data, I'm saying, still we have to read the entire case. But just seeing or reading these points, I get an idea here. Draft consolidated statement of comprehensive income for the year ended 30th September 2006. Okay, the question is regarding what, sir? The question is regarding simple. Question is regarding P&L. As I mentioned, for December attempt, cash flow and P&L are very important. I've uploaded a video regarding the prediction. What are the topics which are very important? Refer it once. Yes. The information should be used to answer the question requirement within your chosen response option. Okay, we have to either on the spreadsheet or on the Word, we have to record this. Yes, sir. Then chalo, let us start with this now. Okay, sir, we can see exhibit 1 is there, sir, regarding fair value adjustment. Exhibit 1 is regarding what, sir? A simple fair value adjustment. Then exhibit 2 is what, sir? Exhibit 2 is regarding goodwill and its impairment. Goodwill and the impairment review. Yes, sir. Exhibit 3, classification required by IFRS 18. As I mentioned in your exam, the exhibit data will be very less. It's do not get panic, sir. The data will be too big, etc. No, it will be small only. So do not worry much. Huh? Then next one. Exhibit 4 is what? Gain reported in OCI. What I'm saying, gain reported in what, sir? So gain reported in OCI. Simple. Then see next one. Then exhibit 5, draft consolidated statement of profit and loss. So they have given the profit and loss. You can see, sir, revenue, cost of sales, gross profit, operating, etc. Then gain on sale of shares is given here. Revaluation gain is given. Exchange difference on translating foreign operation. Yes, foreign operation is also there in this. Then, sir, profit attributable to owners, NCI is given here. Yes. Then total comprehensive income attributable to owners of the parent and NCI. Yes, sir. So they have given the total here, though the mistake 25, 250, and here is 10,000 meter. 10,000. Yes, this is the total here. Yes, sir. So now what should we do here? Let us read the requirement so that we get a basic idea and a basic idea of what all is tested in this question. Yes, sir. So then let us read the requirement. Yes, sir. So see the requirements. Using exhibit 1, explain how the fair value adjustment affects the measurement of Z goodwill at acquisition. Okay, they are saying that, sir, how will the fair value adjustment goodwill? How will the fair value adjustment affect goodwill calculation? We have to see that. Now you know, key sir, whenever the fair value of the asset is increasing, sir, my asset value is increasing. What will happen to my net asset? See, what is net asset? It is equity. Equity is equal to asset minus liability. So, if the net asset value, if my asset value is increasing, net asset will also increase. Sir, if the net asset is increasing, what will happen to goodwill? Goodwill will come down. See, I say today 100 is this, NCA is 20, and 80 is my fair value of the asset. What is my goodwill? So 40 is the goodwill. If I say 100, I increase my, this is 20, I increase my fair value of the net asset. I increase this on the date of acquisition. So my goodwill is coming to 20. So you can see as I've increased the net assets, the value of the goodwill is coming down. So you have to explain that. And what is the first sentence you'll write down? On that basis, I say the fair value of the asset is increasing, the goodwill will come down. So that means the goodwill which they have calculated is wrong. Chalo, let us read. Let us read the exhibit 1. See, exhibit 1. Fair value adjustment. On 1st October 2005, when W acquired control of Z, the net asset of Z had a carrying amount of how much? 5 million. Okay, on the 1st October, we are acquiring the carrying amount of the net asset is what, sir? 5 million. And the fair value is how much, sir? 6 million. The fair value is 6 million. The difference between carrying amount and the fair value relates to PPE. They are saying relates to PPE that had a useful life of 4 years. Okay, it had a useful life of 4 years. I can say useful life is 4 years. Yes, sir. It's a PPE. Fair value is coming to 1 million. The difference is what? Between this, the difference is 1 million. Then from 1st October 2005. So from 1st October 2005, the useful life is 4 years. The fair value adjustment has not been accounted for. Okay. Listen. See, they have not accounted for this. They have not accounted for this. We have to account it. Sir, when we account it, what will happen? Sir, the value of the non-current asset will increase, sir. Excess depreciation will be there. But here, the question is from P&L point of view. Sir, in P&L, we will never increase the value of the non-current asset. It is in balance sheet. But excess depreciation adjustment will come in P&L. Depreciation has been correctly classified as operating expense. Okay, they mentioned that depreciation is recorded in operating expense, not in cost of sales. In our regular classes, I know I mentioned that cost of sales, but I mentioned you, if something is mentioned in the question specifically, record it there. Z goodwill has been impairment tested. Z goodwill has been impairment tested and no impairment loss has arisen. They are saying that, sir, goodwill has been tested for impairment, but there is no impairment. There is no impairment. Okay, sir, there is no impairment. So we are done reading. Let us read the requirement once again. We understand. Explain how the fair value adjustment affects the measurement of Z goodwill at acquisition. They are saying how the fair value will affect the goodwill. Yes, sir. We have to mention how it will affect goodwill. So goodwill will come down, sir. So if goodwill will come down, there is some relationship between goodwill and impairment. We have to discuss about that also. And they mention explain in simple English, write down in simple sentences. And W consolidated statement of comprehensive income for the year ended 30th September 2006. And W's how this will affect the consolidated books also. How it will affect the consolidated P&L. Sir, if excess depreciation is there, excess depreciation, remember, sir, excess depreciation will be given to parent and NCI. So here also we have to calculate that part. Okay, chalo then let us start with the discussion now. Now see everyone, you say, sir, fair value is 1 million in excess. So fair value. Now, what will I say? What will I say? Now, what do we do? Date of acquisition, reporting date. I record here 1 million, 1 million. So depreciation is how much, sir? 1 million divided by 4, that is 250. So how much will this be? So 1000. This will be 750. Sir, 250 is what? 250 is what, sir? Excess depreciation. Yes, sir. So till now, see me, what will you mention? Can I say because of fair value? Because there is an increase in fair value, the goodwill will come down. So fair value is increasing, goodwill will come down. Fair value is increasing, goodwill will come down. Yes, sir. So what will you say other than this? I say that if we consider the fair value of the PP, the goodwill will come down. That means the goodwill was overstated. Before doing this adjustment, goodwill was overstated. It was overstated. Yes, sir. And then the goodwill was overstated. The goodwill will reduce now. Sir, if goodwill will reduce, we have to discuss from impairment point of view also. Yes, we will discuss. Sir, as we have seen excess depreciation, where will you record this excess depreciation? Sir, in operating category, as an expense, in P&L. Simple, sir. We will recognize this as an expense in P&L. As an expense in P&L. Simple. Operating category. So this, what is the journal entry for this one? See now everyone, how we should record. They have not recorded this depreciation. They have not recorded fair value. If they have not recorded fair value, that means they have not recorded depreciation also. We have to record it. So see now, debit non-current asset value is increasing. Debit non-current asset value is increasing, and then we record that. But now we are discussing from depreciation point of view. So non-current asset value is decreasing by 250. Yes, sir. And it will be an expense for whom? Sir, it will be an expense for parent and it will be an expense for NCI. Yes, sir. How much is that? What is the percentage here? It was Z company. What is the percentage? 80 percentage. Z company, it is the percentage is what? 80 percentage. Yes, sir. So see now. So 80 means 250 into 80. It is 200. And for NCA is what? 50, sir. So NCA is what? 50. So we have to record this adjustment. We have to record this adjustment. Do we change the balance sheet? It's not balance sheet. It's P&L part. So what we will say? Sir, we will recognize this expense of 215 operating category and we will allocate to parent and NCA. Simple. Yes, sir. Okay, no doubts in this. Now, they have mentioned that goodwill impairment test was done. Goodwill impairment test was done. When goodwill impairment test is done, no impairment. When will you say impairment is not there? Sir, impairment will not be there when the carrying amount is less, RA is more. So that means, sir, they have done goodwill impairment test. That means the carrying amount was less. The RA was what, sir? More. Now, if the goodwill was if the goodwill was overstated first, yes or no? After doing this adjustment, first the goodwill was overstated. Goodwill was overstated. But after the adjustment, goodwill will decrease. So goodwill will decrease. So if goodwill will decrease by a smaller amount, the goodwill is decreasing by how much? You can see the goodwill is decreasing by 1 million. That means, will there be impairment? No, sir. The goodwill was more. When the goodwill was more, impairment was not there. Now the goodwill is low. The goodwill has reduced. When goodwill value was more, I say when goodwill was 10, impairment was not there. Now goodwill is 9. Will there be impairment? No impairment. No impairment, sir. There will be no impairment because the carrying amount is less only here. So the carrying amount was at 10 now, but it became 9. So no goodwill. So you have to explain these points. So a very easy adjustment. Look at, have a look. What are the points, sir? So 4 marks, 4 simple sentences. What will I see the first sentence? The fair value increase in the asset will increase the net asset on the date of acquisition. So this will lead to decrease in the goodwill as goodwill was overstated first. Then I say, as goodwill was overstated first, there was no impairment. And now once the goodwill is reduced by a smaller amount, so the impairment also will not be there. We can say that. Then I say that this due to fair value, there will be excess depreciation. Excess depreciation will arise, that is 250,000. This 250,000 excess depreciation is recognized in P&L under operating category as an expense. Then this 250,000 depreciation is allocated to parent and NCI based on the ownership. Yes, sir. Chalo then let us see the answer for this. How they are presented. Yes. See now. Answer. In the calculation of goodwill, in the calculation of goodwill at acquisition, the in the calculation of goodwill at acquisition, the assets of Z were understated by 1 million because they should be at fair value rather than carrying amount. Yes, sir. As a result, goodwill was overstated by 1 million. We have mentioned this. Yes, sir. As the net assets were low, so the goodwill was overstated by 1 million. The impairment review of the goodwill have been conducted and no impairment loss arises. Therefore, the correction of overstated goodwill to smaller amount will not result in any impairment loss. We have discussed this. The correction of goodwill does not impact on the consolidated statement of P&L. We have to mention this, that it will not impact the P&L because the question was very specific to that whether it will impact or not. So give a conclusion that it will not have an impact on P&L. Yes, sir. However, the fair value of the PP is increasing gives rise to additional depreciation that affects the consolidated P&L. So this goodwill impairment, this decrease in goodwill not impact impairment, but the fair value increase will impact the P&L. The annual depreciation charge of 250,000 is an additional operating expense, additional depreciation expense which is recognized in operating category. Since this additional expense relates to subsidiary that is 80% owned, the profit attributable to the parent and the NCI will be reduced by 200,000 and 50,000 respectively, reflecting their ownership interest. So we have to explain here how it will have an impact on your P&L in this one. So what we will explain, that 200,000 will reduce the profit attributable to parent, and for NCI it will be reduced by 50,000 respectively. So with this, the first part is done, a easy part. Yes, sir. Now let us read the second part. Using Exhibit 2, calculate the goodwill arising on the acquisition of J. So we have to calculate the goodwill, easy cash marks, and the impairment loss following in the impairment review. Okay, we have to calculate impairment loss also and goodwill. Remember in our regular class, we have done questions where we have to calculate the impairment amount also. We treat the subsidiary as a CGU. They give RA. We compare the carrying amount. We had gross up. Yes or no? We had to, in case of proportionate net asset method, we have to gross up the goodwill and then add to the net asset. We have done in a regular class. If not, we'll discuss again. See now. Explain how this impairment loss should be accounted for in W's consolidated financial statement. How this should be accounted in consolidated financial statements. It is saying from the point of view of consolidated financial statements, not from the viewpoint of P&L only. From the consolidated financial statements from P&L as well as balance sheet point of view. Let us read the requirement. But see, we have to do this adjustment also in our draft books. In our draft P&L, we have to do this. We will do it. But let us first complete each and every adjustment. Yes, sir. Now see the next case. Exhibit 2, Goodwill and Impairment Review. W acquired 60% of J. W acquired 60% of J's 1 million equity shares on 1st October 2000 X5. So W is acquiring 60% shares of J company out of how much? 1 million shares on 1st October 2000 X5. Paying consideration of 10 million when the fair value of the net asset of J was 8 million. Okay, what is the cash consideration? Purchase consideration 10 million. The fair value of the net asset is 8 million. J's share price on 1st October 2000 X5 was 4 million. Okay, the share price of J company is given. Sir, why they have given J company share price? Remember, in the class I mentioned, whenever parent company share price is given is for share exchange value. But here they have given subsidiary. Why will subsidiary company share price be given? To calculate the NCI. Let us see. And the non-controlling interest is to be measured at fair value. Okay, sir, it is at fair value. We have to measure it. We have to calculate it. Then, sir, J is assessed as a cash generating unit C, and at reporting date has net assets of 10 million. Net assets are how much, sir? 10 million. It's not including goodwill. We have to include goodwill in CG. And the RA is 11.6 million. Yes, sir. A very easy part. Yes or no? Sir, NCA is at fair value. So the goodwill which we calculate will also be at full 100%. So there is no need to gross it up. Simple thing. Chalo dekho. Sir, how do we calculate goodwill? Purchase consideration is what? 10 million, sir. Then NCA. What will be the value of NCA? Sir, 1 million shares into 40% which belongs to NCA into 4. If we do this, kitna hara ye? Into 40 percentage into 4, sir. 1600 beta. Yes, sir. Then less what? Fair value of net asset. How much is this? Fair value of the net asset. If you can see, the net assets are 8 million. Yes, sir. So what is the goodwill we get on the date of acquisition? Goodwill at DOA is 10,000 plus 1600 minus 8,000. That is 3,600. Yes, sir. So this is done, sir. Goodwill calculation was very easy. Now we have to calculate what, sir? We have to calculate impairment. Now how do we calculate impairment? So net asset is given. Can I say net asset is what? 10 million. So let me do this also in thousands only. 10,000. Yes, sir. What will I do? I will add here goodwill. Goodwill. Sir, can I say this goodwill is 100 percentage because NCA is at fair value. So how much is this? 3,600. So what is the total we are getting? 13,600. So what is the RA here? RA कितना है? 11,600 बेटे. So कितने का difference है? So my carrying amount is more. RA is less. So impairment is there. Impairment loss. So what is the value of impairment loss, sir? So impairment loss is what? If you do here, you get 2,000 bete. Sir, impairment loss is 2,000. So this impairment loss, how we will recognize the? Sir, we will recognize this in operating category as an expense in P&L, sir. Sir, and reduce the value of goodwill and reduce the value of goodwill, sir, by 2,000. Now, can I say here goodwill is impaired by 2,000? We recognize this into P&L as an expense in operating category and reduce the goodwill by 2,000. So, what is the value of the goodwill at reporting date? You're at reporting date. What is the value of goodwill? 2,000 minus, so 1,600. So, goodwill value in the balance sheet will be what? 1,600. Yes, sir. Now, this goodwill, how should we allocate it, bete? Sir, as we know, this is which method? Sir, this is full goodwill method. It is full goodwill method. In case of full goodwill method, what should we do? So this impairment will be allocated to parent and NCI. Sir, full goodwill method, we have to allocate this 2000 to parent and NCA, better easy. Easy cash marks. Sir, how much will this be then? Into 40%, that is 800. Then this into 60%. How much is this? 1200. So for parent, we allocate 1200 and here we allocate 800. Easy cash marks. Easy cash marks, bete. Understand that? Yes, sir. So very easy part. The in the question they mention what explain. So you have to explain it better. Explain it. Calculate the goodwill done with the an impairment done. Sir. Explain how the impairment loss should be accounted. Impairment loss is recognized in P&L under operating category as an expense and will reduce the value of the goodwill. One sentence. Second sentence, this impairment will be allocated to NCA and parent in their percentage, ownership percentage. Yes. So let us see the answer. Answer. Yeah. See now. Goodwill is how much? 3600 is the goodwill ka value. Yes, sir. 10,000 plus 1,600 minus the impairment we got 2,000. Yes, they also got. Then the impairment loss of 2 million is an additional operating expense in the consolidated statement of profit and loss under the operating category and reduce the carrying amount of the goodwill in the consolidated statement of financial position. Yes. Since the NCA was measured at fair value at acquisition, the profit attributable to NCA, the profit attributable to parent and NCA will reduce by the respective amount. That is 800,000 for NCA, 1,200 for parent. Easy part, easy. 4 marks. First 4 marks requirement was easy. The next 4 marks also was easy. Yes, sir. So with this part is also done. Then let us read the next requirement. See, we have to do each and every adjustment in the draft book, in the draft PN also. We will do. First, let us complete it. Using Exhibit 3, explain how the foreign exchange difference should be classified in W's consolidated statement of comprehensive income for the year ended 30th September 2006 in accordance with IFRS 18. They are saying what? Explain how foreign exchange differences will be recorded. Now remember, IAS 21, we are done. Monetary items, monetary items are restated, non-monetary items are not restated. Sir, if monetary items are restated, sir, we should recognize the foreign exchange gain or loss in P&L. Which category? Sir, if it is relating to business, we recognize in P&L. If it is relating to investment, we recognize in investing category. Sir, if it relates to borrowing, we recognize in what? Financing category. Yes, sir. And sir, whenever there is a foreign operation, we have a foreign operation, then that exchange gain or loss is recognized in OCI. OCI, and it is reclassified to P&L when we dispose of the company and we record in a separate translation reserve account. Yes, sir. Let us read the requirement. See now, W has certain foreign exchange difference. Okay. And these have been correctly calculated. Okay, the calculation is done proper. Sir, if the calculation is done proper, classification could be wrong. If classification is right, calculation could be wrong. So here they are saying calculation is right. Out of these two, one will happen. Calculation is right, presentation is wrong. Presentation is right, calculation could be wrong. So we have to see. Here they mention what calculation is right. And at a net loss of $180,000. However, the directors have not applied the requirement of IFRS 18 presentation and they have not applied. They have not applied IFRS 18 and have recorded and have classified all of the exchange differences operating expense. They have recognized each and everything in operating category. Can I say this is wrong or not? It is wrong, bete, because we have to classify based upon the nature of the underlying asset and liability. IFRS 18 says what? We have to recognize gain or loss based on the underlying asset, the nature of the underlying asset and liability, rather than the nature of your income and expense. But each and everything the director has done what? They have recorded in operating expense. And I mentioned in the class, IFRS 18, how it will be tested. Either a direct theory question will come, chances are very less, or the accountant has done some mistake, we have to correct it. The foreign exchange differences includes what also? The foreign exchange difference includes what? $200,000 loss relating to overseas loan. Are baap re baap. Sir, we have taken a loan from a overseas country. We have taken a loan in foreign currency. Now remember in the class we have done this. Whenever we take overseas loan, we do the accounting as per IFRS 9 in the foreign currency. Then we convert it. Sir, when we convert it, we have what? We have gain or loss. See here, ये देखो. See. This is the table which I given. Sir, first we do the accounting in foreign currency. Then, sir, we multiply the exchange rate. Then, for sure, we'll get an exchange gain or loss. This exchange gain or loss, which category? Financing category, but they have recorded in operating category. They have recorded in operating category. Sir, they have recorded in operating category. Sir, includes a 200,000 loss. What is the net loss they have recorded? So net loss is $180,000. Out of this 200,000 relates to what? A overseas loan. So 180,000 is the net loss, but 200,000 is the loss. So that means there is a gain. Some or the other gain is that. Incurred by W. So it is incurred by W. That is parent company. Yes. So if it is parent company, it will be allocated to parent only. And 20,000 gain on the retranslation of 100 percentage overseas subsidiary. Are baap re baap. This 20,000 relates to what? So this 20,000 gain relates to retranslation of 100 percentage overseas subsidiary. And this 100 percentage overseas subsidiary, remember foreign operation, sir, exchange gain or loss is recognized in OCI and we record separately in translation reserve. We recognize separately in translation reserve account. But here what they have done? They have included everything to operating. They have done mistakes. Calculation right hai baba. But mistake kya hai? What is the mistake? They have recorded everything into operating category. That is also 180. They have done the net off. Can we do net off? No. IFRS 18 says that net off will only be allowed if respective standards allows you. IAS 12, IFRS 9 we have seen. But here we can't do it. So what will I say, sir? Operating expenses. So in operating expenses, what they have recorded, bete? In operating expenses, they have recorded 180 as an expense, as a loss. Is this right? Nothing is included in operating expenses, bete. But what should we say now? In operating expenses, the first one is what, sir? The first one is regarding your loan. Sir, loan, foreign loan. It is a loan, overseas loan. So for overseas loan, what should we do? Sir, can I say the operating expense has included? Can I say what is the expense we have included here? So 200,000. So can I say in operating expense this 180 is included? I have to remove it. When I remove, what will I do? I will add back 200,000. I will remove it. I will reduce it by negative sign. But here already my operating expense is in negative sign. So what will I say? I will add it here. Then where will I record this? Sir, we will record this in financing category as an expense. Simple. Overseas loan. Sir, overseas loan loss is there of 200,000. We should recognize in financing category as an expense. But they have included in operating category. So we remove the loss from operating expense. Now when we remove, we have to create a negative sign, but your operating expense is in already negative sign. In your exam it will be negative sign, so add it back. Be careful with these signs. Yes sir. The next one is 20,000 gain. So this gain is that, this gain where do we record? This gain where do we record, everyone? So the gain we record in OCI. Sir, but what they have done, what they have done but what they have done, bete, they have included this gain in what? Operating expense. Now whenever a gain is included in operating expense, whenever a gain is included in operating expense, your operating expense will decrease or increase? Sir, decrease, sir. Your operating expense will decrease, baba. Sir, we have to reverse it now. We have to reverse it. So when I reverse it, what will I say? I should increase the operating expenses. should increase the operating expense, sir. Sir, when I increase the operating expense, what will I say? Negative 20 year, because it is in negative year. So then in OCI, where do we record this, sir? We recognize this in OCI for 20 year. OCI positive. So this will be allocated to whom? Parent. Sir, why not NCA? Because it is a 100% overseas subsidiary. So very simple and easy thing. They have directly recorded this 118 operating category, which is wrong. Because as per IFRS 8, gain or loss should be recorded. As per IFRS 8, classification should be based on operating, financing, investing, income tax, and discontinue operation. So when we classify, when we record the respective item, it will be based on the underlying asset. The underlying asset is what? On that basis we recorded. But they have recording operating, this is wrong. And the foreign exchange gain or loss is recognized in OCI and accumulated in translation reserve. Accumulated in translation reserve. And it will be allocated to parent and NCA. But in the given case, it will be allocated to what, sir? It will be allocated to parent only. Yes sir. So chalo then let us read the adjustment. What is the answer saying? Answer में क्या लिखा हुआ है देखो इधर. Okay, the foreign exchange difference on the retranslation of the overseas subsidiary, a gain of 200,000, should not be classified as an operating expense because it should not be recognized in consolidated P&L. They mentioned that the exchange gain or loss on the retranslation of the foreign operation, that is the gain of 200,000, should not be recorded in the operating expense because it is not included in P&L. Instead, the exchange gain or loss should be recognized in OCI and accumulated in the separate component of equity, translation of foreign operation. As the exchange difference relates to 100% owned subsidiary, there is no impact on the NCI. Yes, sir. I mentioned this point. These 2 points simple. You can write down then. As per IFRS 8, the classification of income and expense is determined by the nature of the underlying asset I mentioned rather than the nature of income and expense. Yes, sir. Then the operating category is residual. Yes or no? Remaining exchange difference will only be classified in operating category if they do not meet the definition of other categories. Investing, financing, etc. They are saying that if it is investing, first we record, we decide based on what? Investing. Then financing. If it is not going in investing, financing, income tax, and discontinue operation, it will go to operating only bit. Eh? Yes, sir. Then the 200,000 exchange loss relates to an overseas loan as W business is manufacturing. Yes, this 200,000 also will come in what? This 200,000 will also come in financing because W company business was manufacturing. It's not a bank. Understand? Whenever bank is taking money from you and it is lending to some other person, they will get interest from that and they will pay you the interest. So one side bank has a revenue, on one side expense. So these both things are an business point of view for the bank. But for manufacturing company, it's not a business. So it will be recognized in operating category. Is a manufacturing and does not involve in raising or investing. So this expense must be classified in financing category. Therefore, the exchange loss should be included in the interest expense on borrowing in the consolidated statement of profit and loss. Yes, sir. See now, 1 marks, 1 marks, 1, 1 and 1. The requirement was for 4 marks. Even though you have not written this point, it's okay. You have written these points. Yes, sir, done. Same way here also, calculation was 2 marks. 1 year, 1 year. 1 marks for this, 1 marks for this. Yes, sir. Same way in the above case also. 1 marks, 1 marks, 1 marks, 1 marks, and 1 marks. Totally 5 marks. But we have to maximum score 4 marks. As mentioned now in the class also that whenever a question comes, there will be a the marking the your marking scheme. The examiner will evaluate considering that the question is for 5 or 6 marks. If the question is for 6 marks, they will evaluate considering a question is for 5 to 6 marks. So there will be some edge for you to score marks. Yes, sir. That is the reason we see a lot of time ki many students saying ki sir we will not clear professional papers etc. But once the result are out, they say okay sir we cleared it, we got very good score. That is the reason better. So the first part, second part, and the third part is done. Then coming to the last part, the last D part that is of this, and then draft version we have. Using Exhibit 4, explain how W should account how W should account for the sale of 10% interest in H in its consolidated financial statements. They're not talking about P&L. In consolidated financial statements, we have to mention. Then the next one is what? Adjust the pre-populated spreadsheet response option to prepare W's revised statement of comprehensive income for the year ended 30th September 2006. We have to prepare the revised one. So now W company is selling only 10%. Yes, sir. The shareholding was 90 if you remember. See now. Exhibit 4. Gain reported in other comprehensive income. So gain we have reported in other comprehensive income. Let us do this. W had purchased a 90 percentage controlling interest in H for 90 million. Arre Bablu. So they have 90 percentage here. They are selling 10 percentage. Is the control lost here? So control is. So it is a case of subsidiary to subsidiary. Now, remember. Whenever it is a case of subsidiary to subsidiary, will the adjustment be done in P&L, OCI? No, Baba. There will be no gain or loss. Gain or loss will not be calculated. The adjustment is done within equity and increase in NCI. Adjustment is done within equity and increase in NCI, sir. That is, we increase in NCI and within equity we do. We will never record this in OCI or in P&L. Understand that? Yes, sir. Control is not lost. We will do full consolidation here. Yes, sir. Then, on consolidation of subsidiary, non-controlling interest was measured at fair value. Sir, it is at fair value. Okay. Sir, fair value. So whenever we dispose of 10 percentage, disposal of 10% will lead to what? NCA was how much, sir? It was 90 percentage. NCA was how much here? 10 percentage. Now NCA will become how much? 10 percentage plus 10. NCI will become 20 percentage. So we do the adjustment within what? So we do the adjustment within equity. So we have to calculate what? Sale proceed and increase in NCI. What is the NCI percentage? Sir, how do we calculate increase in NCI? Remember shortcut. Sir, net asset at disposal date plus goodwill into the increase percentage. Whatever is the increase in NCI. Yes, we have to consider this point, बेटे. हमको ये point consider करना पड़ेगा. We have learned this shortcut. So चलो let us see now. Yes, sir. What are they saying? They have mentioned that 90 million we have paid to acquire on this, etc. XYZ. During the accounting period, W sold 10 percentage of equity shares of H for 25. Okay, so proceed कितना है? Sir, the proceed by selling 10 percentage we are getting 25 million. A gain of 15 million. A gain of 15 million. A gain of 15 million. They have mentioned a gain is recorded 15 million. How can we get a gain of 15 million? See, no, sir, if I say my sale proceed is 25, how will I get my gain as 15? Sir, when the carrying amount is what? 10. They have mentioned this as this. Now, first of all, they have calculated gain. Yes, sir. Do we calculate gain in CFS? No. CFS, no gain. Individual financial statements gain. Yes, sir. Remember, bete, whenever it is subsidiary to subsidiary, gain will be calculated when control is lost, and gain is calculated in individual books, not in consolidated books. Yes, sir. Yes, sir. They have. We should calculate gain in individual books. Yes, sir. They have done the accounting as this. They have recorded the gain, being the difference between the sale proceed and the cost of the share sold. Okay. See, they've calculated this way only. As I mentioned, 25 minus the carrying amount. That carrying amount was what? Cost of the shares. Yes, sir. And has been recognizing group equity. It has been recognizing group equity. Okay, sir, they have recognized in group equity. Okay, they have recognized in group equity as well as in OCI and reported in the group OCI. They have recognized in equity as well as OCI. Is this right? We will never recognize in OCI, we will only recognize in equity. Equity. But can I say the calculation is wrong? The calculation is also wrong. The calculation which they have done is from what point of view? From individual point of view. From individual point of view. This is wrong, bete. Yes, sir. Then, at the date of sale, the net asset of H were 170 million. The non-controlling interest was 13.5 million and the goodwill was 10 million. So they have given the net asset, they have given the goodwill, which we will use to calculate what? Which we will use to calculate the increase in NCIC. So net asset is how much? 170 and goodwill is how much, sir? 10. So it is 180 into 10 percentage into 10 percentage. How much is this? Sir, it is 18. Why I have taken goodwill? Because NCA is at fair value. Bete. In the question they had mentioned that NCA is at fair value. So we have considered this figure. Sir, we have considered this figure. Now what should we do? Same here. Now they have included again. Can I say this is wrong? Bete, ye wrong hai calculation. This is wrong. Yes, sir. This is wrong. Now, this is wrong. Sir, then how should we calculate, sir? It is not a gain or loss. Adjustment to what? To equity, sir. How we will calculate? Sale proceed is what, sir? What is the sale proceed? 25 million, sir. Then what? NCA is increasing by how much? 18. So what is the increase in equity? Increase in equity is 7, sir. 7 is the increase in equity. 7 is the increase in equity. Sale proceed, your NCA is increasing by 18. So we reduce, we get increase in NCA of 7, sir. We get increase in NCA of 7. Yes, sir. But what they have done, they have included this in OCI. Can I say this OCI is wrong, sir? Also, they have included 15 million. That is wrong, Baba. The calculation also wrong. Presentation भी गलत है. दोनों गलत है. Both are wrong. Now remember one point which I mentioned in the class also as well as in a revision marathon also. Whenever we prepare separate financial statements, then we prepare CFS. Now I say in individual books what they have done. In individual books they have recorded a gain of 15. Yes, sir. They have recognized what? They have recognized a gain of 15 million. Can I say the calculation for the gain calculation? The gain calculation for individual books, the gain calculation for individual books, the gain calculation for CFS. Both are different. So for individual books, the gain calculation is different. In separate books, it is totally different. And in CFS also, it is totally different. If you remember, we take sale proceeds, less fair value of the right retained, less carrying amount disposed. We take net asset at disposal date. We take goodwill at disposal date, less NCA. This all calculation we do. But the calculation was of 15 million, which they have recorded. If they have recorded this 15 million, can I say this 15 million will also come in CFS or not? Yes, sir, this 15 million also comes in CFS. Now, this gain is wrong from the CFS point of view. Yes or no? Yes, sir. So what will I do? I will eliminate this. I will eliminate this. See, we have recorded in separate books. From separate books, it is carry forward to CFS. We will remove it, bete. हम remove कर देंगे इसको. We will remove this and record what? And record what? Record gain as per CFS, as per consolidated financial statement. But sir, in the given case, the gain should be, but gain is only not that. No, sir. The adjustment is in within equity. So you can mention this. There's 15 million is there. It is taken here. We have to remove this. From OCI, we remove Baba. But there will be no gain or loss. Directly, the adjustment is in equity of 7 million. These are the points. Okay, sir. Understood. Please have a look. Have a look. A very important topic. Very good. In our class, we have done this question. We have done this question. We have done this as a basic question. And when we have done other past papers also, we have done this. Ashanti Company, if you remember Ashanti Company, in that we have done this. Yes, sir. There are other questions also where we have done the same question. Repeated. They have recorded in OCI. But what should we do, bete? We should remove this from OCI, and in OCI this 7 will not come. Calculation भी गलत है, presentation भी गलत है. Both the things are wrong. Yes, sir. चलो ना. What is the question saying? Question क्या बोल रहा है? Explain. Okay, we have to explain also. Calculation explain. चलो 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 ये रहा. For 7 marks, the requirement was for 7 marks. So each and every point we have to mention. So see now, W. Oh, what are the points before that? See, what are the first point I'll write down? W sells 10% of hedge companies equity share. That means the control is not lost. So if the control is not lost, it is still an subsidiary. So in that case, what will I say? The transaction is done within equity. So from a group point of view, this sale of transaction is done how? The sale of transaction is done within equity. We increase the NCI, sir, and not adjustment is not done in PNL. Chalo, chalo, chalo. See, W sale of 10% of H equity share does not result in loss of control. Very important. Key points. W will still hold 80% of H equity. H remains a subsidiary of W group. Within, then the transaction is done what? Within an increase in NCI. The transaction is done what? Within the NCI, sir. From a group perspective, this sale of share is a transaction within group equity. Accordingly, no profit or loss to group will arise. There will be no profit or loss, simple. There will be no profit or loss, simple. Understand that? Yes, sir. Then, sir, the control to control transaction does not give rise to any difference. Sorry. The control transaction does gives rise to a difference that is directly taken to what? Equity. The difference is between proceed received and the increase in NCI. What is the difference? So difference is between proceed and increase in NCA. All this I have mentioned in the class. You have to write down this. I mentioned that this is the first point you mentioned. Control is not lost. Then you say the adjustment is done within equity. Then you say how is the adjustment calculated as the difference between proceed received and increase in NCA. Then the increase in NCI of H is measured at 10% of the sum of net asset at the date of transaction and goodwill. Goodwill is relevant to include as the non-controlling interest at acquisition was measured at fair value, meaning that goodwill is full goodwill and accordingly partially attributable to NCI also. This also I have mentioned. See, let me show you in a notes also. किधर किया सर अपन क्वेश्चन ये सर एक बार बता दो कॉन्फिडेंस आ जाएगा चलो सी है these are our class notes which you have done. Disposal. Yeah. See, I mentioned that this is a technical knowledge which you have to write down how NCS calculate. Yes, sir. I have written this. Yes, same thing. See, same calculation. This D company, same question. D company, same question. From 90, they are selling 5. Only the percentage is changing. See, same. Reduce. Goodwill is not remeasured, etc. All these points we have done, we have calculated. Same thing in the same question. कुछ अलग नहीं है ना यहाँ. Yes, sir. Then, what is the calculation, sir? What is the journal entry they have recorded? Journal entry. Even though you will not record journal entry, no issues. But show the calculation. Why we have recorded journal entry? So that it becomes easy for the adjustment purpose. See, cash proceed debit, then credit NCI by 18, and difference is 7, sir. Yes, sir. As the difference of 7 is a credit balance, it will increase equity, other components of equity. The draft group other comprehensive income reports a gain of 15 million. This should be removed. Yes, sir. It was explanation. Explanation means you have to write down each and everything. Sir, we remove this 15 million. However, in the statement of profit or loss of the individual parent W, it is appropriate to recognize a gain on the sale of shares in H. So in the individual books, we recognize no issue. This gain is 15 million, being the sale proceed of 20 million less cost of 10 million. Yes, we have done this. But they have not mentioned this one point that this 15 million, you can mention that one point extra which we have discussed. No issues in that. See, what is the journal entry? Debit, credit, sir. Sir, NCI is increasing. NCI credit by 18, sir. Sir, cash proceed is how much, sir? 25, sir. So what will be the remaining here, sir? The remaining is increase in equity by 7. So we have to do this and we have written the points also as mentioned. So 7 marks, 7 simple points. What are the points, sir? Sir, can you please show the marking scheme? Yes, see here. Chalo, see. Sir, control, sir, 1 marks. It retains control, so it is an increase. So the adjustment is done within NCI. Yes, sir. The difference, how we will calculate this difference, 1 marks. How we will calculate the total, 1 more marks. Yes, sir. Then this 1 more marks, 5, 6, and this is 2 marks. So extra, if you have written this much also, it's okay. This we have to mention that we have to remove this. It's okay, no issues in that. You can show your calculation brackets. So with this, all the 4 exhibits We are done discussion. We are done with the discussion. Now what we will do? The fifth one. What is the fifth one? We have to adjust it. We have to adjust each and everything. We have to adjust each and everything. So let me show a basic here. Then we will jump to the Excel and do it there also. So see now, sir, exchange difference. Excess depreciation, not exchange difference. We had excess depreciation. What is the excess depreciation, everyone? Huh? What is the exchange? The excess depreciation. See. अपन ने journal entry क्या पास किया? So this was the journal entry. So parent is affected, NCA is affected, and PNL. Sir, in PNL we record this as an expense of 250 operating category. Chalo. See, then operating cost is how much, sir? 250. My operating cost is increasing. I'll create a negative sign because this is negative. Yes, sir. Then this 250 you should allocate to whom all? So we should allocate to parent and NCIC. This 9,000 is based on this total. So I will adjust here also 250, sir. Sir, if profit is affected, other comprehensive income also will be affected. Yes, sir. ये भी affect हो जाएगा. Done with the first part. Even though if you show directly here, it's okay. कोई issue नहीं. Directly in this one. Then, sir, impairment. What was the impairment? Sir, impairment was 2000. So, impairment was 2000, which I record this as an expense. And this was allocated to whom all? किसको allocate करेंगे ये? Sir, अरे 250. This is sorry, my bad. We have to allocate to parent and NCI. See now, so parent was how much? 1200. Reduce it, and here it is 800, sir. Here also I'll say 1200 and 800. Because if it affects your profit figure, if it affects your profit, it will also affect what? Your total comprehensive income. Because total comprehensive income includes what, sir? Total comprehensive includes profit plus other comprehensive income. Yes, sir, this is also done. Then the next one, what is the next one we have? The next one which we have is what? First one done, second, sir. The working note number exhibit 3. Exhibit 3, a lot of things are there. Two things are there. So, first is the gain of that 200,000 or 20,000 and loss of 200,000 on the loan. 20,000 gain and 200,000 loss. So, they have recorded gain in operating category. If they have recorded a gain, what will I do? So, gain has reduced this operating cost. Gain has reduced this operating cost. So by 20. So what will I say here now? What will I say? I will add it here. They have they have included the gain here. So what will I say? I will minus 20 here. I will not. Means add means will increase the operating cost. So I create a minus sign. We have to increase the operating cost of 20. So this will be shown where, sir? It will be shown where किधर आएगा किधर आएगा किधर आएगा ये. Sir, exchange gain or loss, sir. Translation 20. I will add it here. Yes, sir. It is a gain. It is a gain. It is a gain. It is a gain. Yes, sir. Here, the calculation was right. The amount was right. Only the presentation was wrong. But, sir, the present. So, sir, this will affect parent. Sir, ultimately 0, no. I will remove and I will adding. Net impact is 0 here. Yes, sir. So see, sir, what should we do? In this parent, I will reduce here 20. I will reduce here 20. What will I do? Sir, we will reduce here 20. Because see now, here this is done. Sir, 20 have increases my operating cost. If I increase my operating cost, parent also will reduce by 20. Parent's profit, yes, sir. Will NCA affect? No, sir. Then other comprehensive income, what did I do? I increased it. Other comprehensive income, what did I do? I have increased it, sir. I have increased it. Yes, sir. Then chalo, sir. Chalo, then next part. Sir, loan. For overseas loan, what was the thing here? For overseas loan, what was the 200,000? Sir, it is included here. It is included here. So what will I do? How will I will remove this, sir? I will consider 200,000. We have to remove it. So I will add it. Sir, we have to remove it. I will add it. Yes, sir. And we will allocate this to what, sir? This we will allocate to financing category. Yeah, yes, sir. 200 financing category. In the class, I mentioned what you can either do this separately calculation in the working note and then provide your total. It's okay. Still, you'll get full marks. or if you show here, no issues in that bit. No issues in that. No issues in that. Yes, sir. Yes, sir. So I've removed 20 here. Sir, why did not we remove your 20? See, remove 20 plus 20 again. Net impact is zero only, no bete. In this owner of parent, this 20 we have reduced from here. So that 20 is included here. So if I reduce 20, I will add back 20. The net impact is zero. So this is also done, sir. Working notum. Then the last one. What is the last one, everyone? What is the last one? I will do it on Excel also, so do not worry. Sir, the last one was gain on sale. Sir, how much was the gain? 15,000. I will reduce this 15,000 from here. Nothing will come in OCI, bete. Nothing else will come in OCI. No value will come in OCI. So I've reduced this. I will reduce this from this 15,000 parent also here. Yes, sir. Done with all the adjustment. Done with all the adjustments. So we will do this on Excel also. Wait. Urgent nahi karna apan ko. Understand, sir. 250 depreciation we had to record. I recorded it, sir. Minus 6,000 minus 250 I increased. Sir, and here we reduce the profit figures. Yes, sir. Then impairment, sir. I have to record this 200,000 expense. Yes, sir. I have allocated area. Sir, then this foreign gain. This foreign gain was included in operating expense. If this foreign gain was included in operating expense, that means operating expense came down, I have to increase it. So I increase it. Then here I add it. Then this owner of the parent was affected, so I reduced it profit figure. Then here the impact will be zero, sir. Then next one. Then I say, I mentioned in the class, first do for NCA, then automatically show the total for what? Show the total for your this one. See, main marks are what? Adjustment is still here. The marks are awarded till here, huh, bete? Marks are awarded. Here, so directly you can calculate the total and do it. No issues in that. You can directly do the total. No issues in that. Simple. Then, sir, then it was oversea loan 200 here. What we have done, sir, 200 loss we have recorded in this. My expense was more. I have to reduce. I have done here. Sir, here the impact will be zero. Yes or no? Because it was only a presentation mistake, and the presentation mistake was within PNL only, not in OCI part. Yes, sir. Then the last one was gain of 15,000. I have reduced it. I have reduced it. Yes, sir. I have reduced it. So now let me share the Excel sheet with you so we can do the presentation on the Excel sheet also. I hope you can see the Excel sheet. Working, I say adjustment 1. Copy this, I paste it, I say adjustment 2. Copy and I paste it, adjustment 3. Copy, I will paste it, adjustment 4. Then total. Okay. Here I've recorded foreign exchange gain or loss. Okay, let me separate it here. Let me separate it for adjustment 5. This is foreign exchange gain. Here I'll record foreign exchange on what, sir? Exchange on loan. On loan, we will do for loan also separately. Yes, sir. Then we have total column. Chalo now. The first one is revenue. Any adjustment? No, sir. What did we do here? Sir, operating cost. This is the operating cost. So minus, sir, 250. So minus 250. Yes, sir. Then what will I do? I will come here. I will allocate it here. See, profit attributable. What I say, sir, out of this 250, what was the percentage? This was a 80% subsidiary, Baba. So this into 20 percentage. Yes, sir. Done with this. So same thing I will allocate here also, because if profit is affecting, OCA also will affect. Yes, sir. It will affect here. So ये हो गया. So done with this. Yes, sir. Then what should we say, bete? Then we say what? One important thing here. So see here, everyone. Let me take a look at it. Yes, sir. अरे यार, I hope this is clear to everyone. Yes, sir. Then impairment adjustment. What was the impairment expense? 20,000. So how will I allocate, sir? I will come here into here. This was a 60 percentage company, huh? It is 2000, no? I will write it 2000. Yes, sir. Then here for NCI, how much is this? So into 40 percentage. This subsidiary was 40 60. Yes, sir. Then foreign exchange gain or loss. So this foreign exchange gain or loss is what? This foreign exchange gain or loss is regarding first, we will do regarding overseas subsidiary. Bete. Overseas subsidiary. So there was a gain of how much? Gain of how much it was at 20. So what will I do now? The 20 reduce the operating cost. I will increase it. So minus 20. Yes, sir. Everything is in thousand. So what will I say? And then where will I include this? In items to reclassify exchange difference. Here I will add it here 20. Yes, sir. Yes, sir. So this 20 will impact what all better? So this 20 will impact the profit figure here. Yes, sir. Will this impact OCI? अरे बाबा कर लो देख लो. Sir, I reduce it, but again I increase it. My net impact is zero only. Yes, sir. Then next one, adjustment for loan. Sir, here they have included that 200,000 as an expense. Sir, I have to reverse it. I will add it here. Means you have to remove means negative sign, but already negative sign is that. Then I say where will I record this? In financing category? Financing era 200 negative. Sir, will there be any impact? Nahi baba, no such impact. Then the sale of this 15,000 shares. See this one, this I will remove here. Minus 15,000. Simple. Sir, we removed it from here. It is what in OCA? So is this included in the profit figure? Nice, sir. It is included what? It is included in this OCI part. Yes, sir. So with this is done. Sir, total. For total, will there be marks? What do you think? For total, marks are not there, but let us do this. So how much is OP? This plus this value. Sir, here copy, I will paste it. It is food. Oh, okay, sorry. It is operating profit. This plus this value. Yes, sir. Then what we have associate ka income. So copy and paste it. After associate, we have what? Addition. This plus this value, sir. Then we have what? Financing category. So copy, paste it. 700 in total. Yes, sir. Then we have what? Profit before this one. This plus this value. Yes, sir. Then income tax. Income tax value to will remain same only. There is no such changes in income tax. Yes, sir. So what is the profit we get? The profit figure which we get is 7,730. Yes, sir. Now coming to year. Year क्या हो जाएगा? Year value will become what, sir? इसको zero हो जाएगा ये. Yes, sir. See, it became zero. Then here revaluation, it will remain same 250. Then sir, item to be reclassified. Sir, 20 years, sir. Then what is the total? Total कर लो. This plus this, sir. Now out of this we have to show how much belongs to this one. So now let me show the profit figure. So profit figure is what? So this one, out of this how much belongs to NCI? Do the adjustment. No, sorry. For NCI we have already done. No, see, copy and paste it. So for NCI how much is the net? 150, sir. Remaining क्या होगा? Sir, remaining will be for parent only. Yes, sir. Now for other comprehensive income, see, there are many ways to do this. Other comprehensive income, my total is 8,000. Sir, NCI is how much, sir? NCI is how much? Sir, remaining is what, sir? To the parent. We get 7,050. We get 7,000. अरे sorry, see, I have not done one mistake I have done. This also we have to allocate it, no? ये भी allocate करते हैं. Yes sir, we allocate this also. Yes. We allocate this. अरे sorry, my bad. 800. I hope the Excel is visible and you can understand. Yes, sir. So 150 and 7,850. Sir, can we recheck this? Yes, you can recheck. See, if you want all this adjustment which we have done, let us recheck it कि correct आ रहा है कि नहीं. Yes, the answer is right. See, there are a lot of ways, but what did I mention for easy purpose in exam? You will not have so much time to do this. If you know this, do it. If not, what? Do this. These two you have to do because the NCA is affected. So if NCA is affected, we have to do these two things. Then directly, what will I do? Then directly, I will calculate NCA here. I will calculate NCA here. Yes, sir. So with this is done. Chalo, 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 chalo. Have a look. Have a look to these adjustments. Yes, sir. Have a look. Have a look so that it becomes easy. So with this, your first question is done. I hope please have a look how we have done the adjustment. Excellent. Chalo, so I hope with this question is done. Coming back to the iPad screen. So with this, so we have completed your consolidation question number one. So I hope this video was helpful to you. If it was helpful, yeah, we have taken long. The time was more because I have done the revision also, and along with that, we have done the question. So practice good and all the best for your exam. So the next question number three and question number four also I'll upload, and question number two also. But first I'll upload question number three and question number four. So please have a watch on that also. Okay then. Bye bye. Have a good day. Signing off. Radhe Radhe to everyone and all the best for your exam.